Hello, traders. FX Pip Collector here. Today is Thursday, January 30th, and this is my morning video where we like to take a quick look at the dollar pairs, including gold and the US dollar index. And we usually always take a look at a few of the JPY pairs. If you haven't done so already, definitely make sure you join my free Discord trading community, 100% free to join. The link for that is at the end of this video up here in the corner and in the description of this video. If you would like to join my membership, you do so by signing up at fxpipcollector.com. You get access to all the benefits listed below and much more for only $30 per month. So anyways, let's take a quick look at the news calendar. Last night was FOMC for the dollar, and it didn't really do a whole heck of a lot. Today we have federal funds rate, or not federal funds rate, but we got finance rate for the euro. And they do plan on lowering interest rates by 25 basis points, unlike the dollar, which they didn't lower interest rates. So for some reason, the euro interest rate news is usually not a big mover. I don't really know why, but it usually is not for some reason. And then shortly after that, we have advanced GDP for the US dollar, and we have unemployment for the dollar. So both of those are pretty decent news events. And a little bit later, we got the press conference. Obviously, you want to pay attention to that. That's when the market, if it is going to make a move on the euro pairs, that's probably more likely when it will happen for sure. So anyways, let's get started. This is the US dollar index on the daily time frame. And if you've been following along with my videos, then really nothing has changed since yesterday, especially with that slow news event. Definitely looks like 5 waves down. I still think it's probably a wave A. I still think this move up is likely going to be a correction to this move down, hence why we got a Fibonacci retracement on there. I would expect to see some sort of a three-way pattern to the upside, probably up to one of these Fib levels for a wave B, probably before we go down again for a wave C. Probably an ABC correction, like maybe even a wave 4. Or if we're lucky, maybe it just turns into a 1, 2, 3 that just starts a trend reversal. Moving on to the euro dollar daily time frame. I mean, it's pretty much exactly the same as the dollar index, but in reverse. I definitely am looking at this as 5 waves up. I mean, to me, it definitely looks like a possible wave A. I do have an alternative count which would have this be right here be an A, this be a B, and this be a C, and this just keeps on trending down from here. Definitely possible. But as of right now, I would definitely look at this as an A because if it's an A, then I would be looking on shorts. I would be looking for shorts on soda time frames for the wave B. If it's the continuation of the downtrend, I would be looking for shorts on soda time frames. So it really doesn't matter that much in my eyes. Moving down to the 1 hour time frame, I really do not think that this correction is over. It definitely does not look like a big enough correction to be complete yet. And if we zoom out far enough, you can see I got my Fibonacci retracement on the whole move up. I would expect it to go down probably to at least a 61, maybe probably more likely to 61 because of all the support we got right here. Maybe end up doing something like this before it actually does go up. And if it doesn't bounce from a fib level, if it doesn't give you a break of structure, then just keep on looking for shorts. If it does just keep on going down and it just goes down, doesn't break structure, goes down, doesn't break structure, then just continue to look for shorts. I definitely would think that this is a wave B or possibly a wave 2, and that we likely will get a Fibonacci bounce at one of these couple Fibonacci levels with a break of structure, showing us that the trend is back up for the wave 3 or possibly the wave C. So moving on to the pound dollar, you have back up to the daily time frame, zooming back in. Pound dollar to me is basically the same as the euro dollar, but now the pound seems to be a little bit stronger than the euro. Definitely looks like an uptrend. I still think the pound dollar possibly could go up and make like a double top or something before it actually does go down and make a correction to the uptrend. Probably the same type of thing though, probably an A, probably a B, and probably a C. Just like the euro dollar, I do see the possibility of this being some really odd looking ABC correction and it just keeps on going down from there. And if it really does just keep on going down, I would be looking for shorts. If it goes down and makes a wave B, I would be looking for shorts. So not too big of a deal either scenario. Going down to the 1 hour time frame, because of the dollar index, I would definitely be looking for shorts on this, keeping in mind that because the pound is a little bit stronger, it could possibly go up and retest these highs. I think there's a chance it might pop up a little bit, take out these highs, possibly even go up and take out these highs before we make a bigger move to the downside. We got to zoom out just a little bit so we can see our fib levels. So if it does something like this and then makes a push down, then likely it will go down to probably the 50 to 61%. Whether we test the highs or not, like I said, we'll have to just wait and see. Probably some sort of an A, a B, and a C correction for an ABC of B or an ABC of 2. And then after we get a fib bounce, after we get a break of structure, it's probably going to end up continuing the uptrend. If it doesn't break structure at a Fibonacci level, but instead just goes down, bounces, no break, bounce, no break, bounce, no break, continue to look for shorts every chance you get. Moving on to the Aussie dollar, taking it back up to the daily time frame, zooming back in. Aussie dollar to me made a very, very clear five-way pattern up. And this one I really couldn't say is a wave C. I think it is a wave A or possibly a wave 1. That means that this push down is likely a correction to that move up, wave B or wave 2. Eventually, I think we're going to get a fib bounce and we're going to get another push up for a wave 3 or a wave C, which could happen at any one of these fib levels, or it possibly could just bounce, not break, and just go down and make a new low. And like I say, if you're looking for shorts for a wave B, but then it just keeps on going down, really shouldn't create any issues in my eyes. Moving down to the U 1 hour time frame, that is, we got our Fibonacci retracement on this whole move right here. This whole move down to me looks like a trend. So I think there's a good chance it might pop up a little bit for like a wave B, probably go up and break some structure, probably go down for a wave C, maybe to one of these fib levels. And then if it breaks to the upside, that's the end of an ABC correction, probably the continuation of the uptrend. If it doesn't break to the upside at a Fibonacci level, then just continue to look for shorts every single chance you get, especially at the end of three-way pullbacks. So moving on to the Kiwi dollar, I don't analyze the Kiwi dollar because it's literally exactly the same as the Aussie dollar, but a little bit weaker in this situation. Moving on to the US dollar CAD. The US dollar CAD is definitely still drifting up, and unless it turns down, makes a big engulfing move, preferably goes down and breaks the structure right here, we can't really say that the uptrend is over. It kind of almost looks like it could stretch out and turn into like a big wave 5, go up and stop everybody out before it decides to go down. Maybe take that weekly time frame structure out. If you go to the weekly time frame structure is right around the 1.467 area, which is still quite a ways up. So going down to the 1 hour time frame, if we zoom back out, I personally would be looking for logs. Definitely looking for logs. I got my Fibonacci retracement on here. Now, if it goes down and breaks structure, I'll be more than happy to start looking for shorts. But if it doesn't do that, I am definitely on the long side. I would be looking at any move I see to the downside as possibly just another correction to the uptrend. Like I showed you on the higher time frames, there's a chance that this thing just goes and goes and goes. If it does decide to break structure at a Fibonacci level, something like this, then that definitely probably would turn me into a seller. I would prefer to see it break structure down here before I become a seller, but if you wanted to get in early and then just observe it to see if it really does go down and break structure, I definitely could see that as a pretty decent little possibility for us. Moving on to the US dollar Swiss, going back up to the daily time frame. The US dollar Swiss to me looks like it might need another push up also. It never did take out the high of wave 4 like a wave A or wave 1 should. Most wave A's, wave 1s do take out the previous structure of the previous trend. And this one definitely didn't. So that means to me that there probably is going to be another push up at some point. If you actually, let's go back up to the daily real quick and zoom in because I just want to show everybody that this is a extremely clear 5 waves. Most likely, we are now making a correction to those 5 waves. So likely like a probably a B, and then eventually down for a C, and then eventually I think it's going to go back up and take out those highs that I showed you when we were zoomed out, which is the high of wave 4 way back here. So keep that in mind. Let's take it down to the 1 hour time frame. 1 hour time frame, most likely what is going on right now is that we are moving up in a correction to this move down. So we got our Fibonacci retracement on here. This move up is likely a correction to this move down. Likely it's going to go up to maybe the 50 to 78%. I mean, how exactly it gets there, your guess is probably as good as mine. Maybe end up doing something like this, making some sort of a three-way pattern. All I really care about is seeing a nice Fibonacci bounce, seeing a nice break of structure. And if I do see that, that is definitely going to be the sorting opportunity that I personally would be waiting for the end of a wave B, probably a wave A, and then eventually wave C, just like what I drew out on the daily time frame. ABC correction to the higher time frame uptrend. Moving on to gold. Gold is still pushing up pretty hard. I mean, like I was saying yesterday, I am definitely waiting for a big breakdown, but so far it hasn't been able to break structure. This possibly is a 1, 2, 3, 4, 5 pattern too. So if it does go down, if it does give us a break of structure, I think this wave B is over, and I think we're starting a huge downtrend for a big wave C. Probably about the same size as this wave A over here. We are at my 100% Fibonacci target, which is definitely my target for wave C of B. So all we really need to do is see a nice turn to the downside, and we will know that this is over. It does not have to turn here though. It may possibly go up, make new highs, go up, take out this high, and possibly just keep on going. It definitely looks like a wave beat. It definitely looks like it's a turn down, but it really doesn't have to. Going down to the 1 hour time frame, we still got our Fibonacci retracement on this last move here. I was saying yesterday that it looks like it's likely going to go up, and it definitely did go up. I was thinking maybe the 78% would be an area of resistance, but it looks like it's pushing beyond that. So the last stop for me would be the 88.5. If it reacts to that level, makes a nice impulsive move down, I still think that it would likely be an ABC correction. But I would have to see a Fibonacci bounce. I would have to see a nice engulfing move to the downside to believe it, because there is definitely a chance that it does go up, and there's definitely a chance that it does end up going up and making a new high, taking out these previous highs. So pay attention to your fib levels, pay attention to nice big engulfing moves to the downside. If they don't happen, then you should be holding longs and possibly even looking for more longs. Moving on to the US dollar yen, I personally think that the dollar yen has already ended this big wave B if you zoom out to the either the weekly or zoom out on the daily. I personally think that this thing is already in a downtrend for this big wave C, which will likely go down and take out probably most of these lows before it actually does go back up. So that's pretty interesting. I mean, the trend is definitely down. We are definitely making lower lows, lower highs. We got our Fibonacci retracement on here to look for areas of resistance, areas where the market may possibly bounce. But as long as it just bounces, doesn't break structure, bounces, doesn't break structure, I will definitely continue to look for shorts on shorter time frames. So yesterday I was saying how it might possibly pop up again, which it did pop up again, but then what happened was it made another lower high, another lower high, another lower high. Man, definitely would want to be on the short side. According to my higher time phase, I mean, maybe it will pop up a little, but I personally would not be trying to go long anyways because of the higher time phase. I would only be looking for shorts. So if it does pop up a little, that should give us a really good sorting opportunity. If it doesn't, and it just makes little pullbacks, it just makes lower lows, lower highs, then you definitely want to continue to hold your shorts and definitely want to continue to look for more shorts at the end of every single pullback you see. So let's take it down to the euro yen, head back up to the daily time frame. To me, I personally think this wave B is over, which I've been saying that for at least a week or so. I think we're already in a wave C. I think this is potentially going to go down and take out all these lows. Probably even go down and take out these lows over here for this wave C. Probably an ABC of 4 on the weekly time frame. So zooming back in, just like the other one, I got my Fibonacci retracement on here to look for areas of resistance. If it does break to the upside at a fib level, then maybe you can start looking for logs. But I personally, as a swing trader, am definitely looking for shorts. I think there's a good chance that even if it does bounce, it's just going to make lower lows, lower highs on the daily time frame in a downtrend. So we are sitting at the 78% Fibonacci retracement right now of the last push up. And that probably is going to be an area of resistance, so it probably will bounce there. But most likely, it's just going to be a bounce. Most likely, it's going to make another lower high, another lower high, and it's just going to keep on going down. For me personally, going long is not only dangerous, but I think it's not even really too smart at this point. I would definitely be looking for shorts only, and I would only be looking to go short at the end of three-way pullbacks. I would not be looking to go long unless we get some sort of a break of structure to the upside, which we definitely do not have. Now, looking at the pound yen is actually a little bit stronger because of the pound right now, but I think the pound is going to break down also. I was definitely saying yesterday that this was possibly going to be like a 1, 2, 3, 4, 5, but honestly, all the other yen pairs, if we use it for correlated pairs, they pretty much all look like they're going down. So this is probably just like a running ABC correcting, meaning that it made a lower high. This is probably just a lower high for the wave C than the wave A. And it's probably just going to keep on going down, in my opinion, making a big wave C, just like the other dollar yen pairs, that is. I think we are going to go down and make an ABC of wave 4, which will probably take out every single one of these lows eventually. So that potentially is going to be a lot of really good sorting opportunities. So let's take it down to the 1 hour time frame. Now we are at a Fibonacci level, and there's definitely still a chance that it might turn back up. I mean, there definitely is still a chance this is an ABC correction. So if you do get a break of structure to the upside at a Fibonacci retracement level, this last push up, then you could definitely take it as a long. But it would have to be a pretty convincing break because I think there's a good chance it'll just bounce, go down, and just continue to make those lower lows, lower highs. If it does continue to make those lower lows, lower highs, then definitely continue to look for shorts every chance you get. If this is really going down on the weekly, daily time frame, then you definitely want to primarily only be looking for shorts, and you really only want to go short at the end of pullbacks. So as far as everything else on this list goes, I do analyze every single thing on this list every single weekday for my premium members. I do 4 Zoom meetings a week, Tuesday, Wednesday, Thursday, and Friday. We do a 2 hour Zoom meeting where we analyze the markets, where I teach, and where we potentially look for trade setups. And every single trade that I take, every single swing trade that I take is provided to every one of my members at the time of entry with stop losses. I don't really use take profits. I just get out when the market tells me to get out. So if you are interested in that, then check out my website, fxpipcollector.com. It's only $30 a month to get you access to all this stuff. If you just want to join my free Discord community, which is 100% free to join, then check out the link up here in the corner, or check out the link in the description to join my free Discord trading community. So anyways, as always, I hope everybody enjoys the rest of their day and happy trading.